there, good morning. You're watching Market Cafe with us on ET Now. I'm Snehisha and with me as usual is Shreyansi Singh. Good morning, Shreyansi. And well, this is a show where we'll take you through all the important stories that were happening in India as well as globally overnight while we were fast asleep. All the important stories we've been tracking for you. And in the second half of the show, we'll also take you through all the stocks that should be on your radar today, the ones to watch out for in today's trading session, as well as the ones that brokerages are flagging off for us bright and early this morning. But let's kickstart the show then, and Shreyansi, take us through what's happening with oil, what's happening with the US markets. Lackluster moves coming in over there, but Dow continues to hold up.
Absolutely, and it's very interesting what's happening with the US markets. I'll come back to you for oil, but then when you look at futures linked to the Dow Jones, what you're looking at is that they were hovering near the flat line, and this was after the 30 stock index posted its 6th consecutive winning day. Now, during the regular trading session then, the S&P 500 inched slightly lower to close near the flat line. And when you look at Nasdaq then, that slid about 0.2% thereabout. A slate of falling tech stocks weighed on the indexes, including Uber and Shopify, both of which had recently reported quarterly results. We'll be talking about Uber later as well. But when you look at the 30 stock Dow, that was the outperformer of the major averages, adding more than 170 points, keeping up that streak like I mentioned. And investors will next turn their attention towards quarterly results from Warner Bros. Discovery, as well as Akamai Technologies on Thursday. Now, on the economic data front, then you've also got weekly jobless claims data, and that will be key to watch as well. Now, when you look at Europe and what happened there as well, the Stock 600 index ended up about 0.3% up, with most sectors and bourses up. And in the positive territory, food and beverage stocks were up 1.8%, mining stocks dipped 1.3%, and when you look at DAX as well, you're looking at gains coming in of about 0.4% there as well. So good moves coming in for Europe. Can't say the same for Wall Street, barring Dow Jones. Nehi.
Alright, well, let's also take a look at what oil has been up to. And US crude inventories data is the one in focus because we got those numbers yesterday, and crude oil futures rose yesterday, recovering losses from earlier in the session as US crude inventories fell. Oil prices found support after US commercial crude stockpiles declined by 1.4 million barrels in the first week of May, according to official data from the Energy Information Administration, which is the EIA. The decline was a surprise compared to industry data that indicated 509,000 barrels build up. Prices have come under pressure as of late on rising inventories, with US stockpiles surging in the last week of April. Now, WTI June contract has ended just below that $79 per barrel mark, nonetheless up 61 cents or almost 0.8%. Year to date, the US crude oil has risen by 10%. On the flip side, Brent July contract is at $83.58 a barrel, up 42 cents or 0.5% uptick coming over there as well. Year to date, this global benchmark has risen 8.5% too. Now, oil prices have fallen more than 7% since reaching their April highs when traders bid up prices on fears that Iran and Israel will go to war. Investors have largely sold off the war premium since then, with Morgan Stanley removing $4 per barrel of risk from its oil price forecast for the year. But that was from Morgan Stanley. Let's also continue talking about oil, and Goldman Sachs also no longer expects OPEC Plus to raise production cuts in the June meeting. The bank said the inventories have recently surprised to the upside, and as a result, the model now estimates only a 37% chance of a production increase decision in June. Important to note that Goldman continues to expect Brent to remain range-bound between 75 and 90 barrels across scenarios. Additionally, they expect prices to average anywhere around $82 per barrel in 2025. But well, that was the extensive on the Wall Street performance, European performance, as well as oil. But Shreyansi, also take us through a list of all the important cues that we need to be watching out for today.
Absolutely, and there's a lot of them, right? So when you look at global cues, like I mentioned, of course, there's initial jobless claims data from the US, and from the UK, you do have Bank of England rate decision. Now, China also has trade data, so keep an eye on that as well. And in terms of the earnings calendar for Nifty companies, you do have Asian Paints, BPCL and SBI reporting their numbers today, and Cipla and Tata Motors reporting their numbers tomorrow. So those will be key to watch as well. But in terms of corporate action, then there's BPCL and HPCL that have a board meet to mull bonus issue, and it's the last day to buy Mindspace Business Parks for income distribution, as well as IRB Infra Trust for interest distribution. So those two counters will remain in the spotlight. And the lock-in period is ending for a couple of counters, ESAF, SFB, as well as flare writing. They will remain in the focus. And in terms of other events, of course, you've got 40,000 crore buyback of securities announced by the government of India, and the Supreme Court deciding on the interim bail to Kejriwal as well. So that will definitely remain in the spotlight as well.
Well, absolutely, lots of stuff happening when it comes to Indian markets, global markets. But let's start the coverage on all the important global stories that we've been tracking for you. And US President Joe Biden has publicly warned Israel for the first time that US would stop supplying weapons if Israeli forces make a major invasion of Rafah, which is the last remaining city in Gaza that has not been ravaged by the Israeli offensive. Biden acknowledged US weapons have been used by Israel to kill civilians in Gaza, where Israel has mounted a 7-month-old offensive aimed at annihilating Hamas.
Alright, then that'll be key to watch. But in other news, then AstraZeneca has initiated a global withdrawal of its COVID-19 vaccine against the backdrop of surplus stocks and declining demand. The withdrawal comes at a time when the vaccine is under scrutiny after the company told a UK court that some of the vaccine recipients had developed low platelet counts and blood clots, a rare side effect.
Well, all right. And we yesterday also had a statement from Serum Institute where they said that they have halted the production of Covishield since 2021. So any news flow around that will also be key to watch. But in other news, then Walt Disney and Warner Brothers will offer a bundle of the Disney Plus, Hulu and Max streaming services in the United States starting this summer. Customers will now be able to sign up on any of the 3 individual websites and choose from an ad-free plan.
Moving on to some earnings then, Uber reported first quarter earnings that were slightly above estimates for revenue. However, the company also posted an unexpected net loss, and revenue was up 15% while net loss widened to $654 million. Now, shares of the company closed 9% lower. Meanwhile, Airbnb earnings beat analyst expectations but offered a weaker than expected guidance. Shares fell more than 6% in after-hours trade.
Alright, well, that's a wrap on all the global stories that we've been tracking for you bright and early this morning. So on that note, viewers, we'll slip into a very short break, but when we return, we'll take stock of how the Asian markets have opened up this morning, so you stay tuned.
I'm back. Thank you so much for staying tuned in. Well, let's take a look at the Asian markets as promised, and Asia-Pacific markets were mixed ahead of China's April trade data as well as pay statistics from Japan. Now, when you look at Japan's Nikkei, what you're looking at is gains coming in of about 0.3%. And on your screens, just up about 0.3% thereabout. When you look at South Korea's Kospi, that retreated from a 1-month high, falling about 0.2% on its open, currently down about 0.3% thereabout. Now, when you look at ASX 200 as well, what you're looking at is that index is also in the red, down about 0.8% thereabout. Let's take a look at Hang Seng and Shanghai as well. When you look at Hang Seng, what you're looking at is just gains of about 0.6% thereabout. Let's take a look at Shanghai as well. And what you're seeing is Shanghai is also in the green, but just up about 0.3% thereabout. Now, yesterday back home, of course, we closed around the 22,300 levels. And currently, what the GIFT Nifty is, what the Nifty implied is indicating at this point is a decent start, at least on the spot basis, and on a futures basis. Just a flattish open is what we're looking at based on the Nifty implied.
Well, all right, slight bit of an uptick indicated for us this morning. So we'll just have to wait and watch and see how the market pans out. But here's the news for the Hi there, welcome back and thanks so much for staying tuned to Market Cafe. You're still watching ET now. Now, high gold prices, fewer weddings in the first quarter and implementation of the Model Code of Conduct may have deterred buyers, but Titan Jewelry CEO expects strong demand revival post-elections. He also spoke on why the company is focusing on lightweight jewelry at present. Listen into this exclusive conversation with ET Now's Aishwarya Patil.
I think customers are waiting to see if gold prices kind of stabilize. They have come down off the peak. I think it had crossed 7,000 rupees a gram on a 22 carat. It's come down by 200-300 rupees in the last few weeks.
What do you think is the reason behind this sort of a downturn?
There is a lot of interest in lightweight jewelry, everyday wear, and in fact we've taken a bet on glam gold. Gold is the season for quarter one and for Akshaya Tritiya. So but there's also a preference for modern designs, newer takes and freshness. So what we've done is we've taken a big bet on lightweights and glamorous.
What would be the ticket price there?
The ticket price largely in these lightweights are sitting between the 50,000 to 1,50,000 price range.
The election season is ongoing right now. Any sort of hit in demand do you see because of the election season?
Yeah, typically jewelry being a high value purchase, and there's a lot of cash purchases also, even legally allowed, at 1 lakh, below 2 lakhs, etc. So, and movement of gold, etc. is restrained during election season. For jewelry, definitely there is always restrictions due to the model code of conduct and nakabandis and everywhere. And I think in general, certain states are also distracted. If I look at a UP, if I look at Bihar, if I look at certain markets like that, where elections really take center stage and grips the entire vast, upcountry markets also. So elections do create a disturbance in demand. I don't think it's a loss of demand. I think it's a deferment of demand. So typically we expect post it opening up, there's a lot of money that gets spent. So there's money in the market. 2, there is a lot of free flow of movement. So we expect a lot of upsurge in demand post-elections.
All right, and that's the word coming in from Titan. They're betting big on lightweight jewelry, but it's the premium consumption theme that has taken the spotlight in the recent few days. And when you take a look at Westside online business, they're saying that they will grow faster than offline, and that's the word coming in from Trent CEO Shalini Pathi. In this exclusive conversation with Aishwarya Patil, she also talks about the leading retailers' expansion strategy. Listen in to what else she had to say.
I think for this year we would continue the trajectory we had last year, which would be 20 to 30 stores is the hope.
In terms of a near-term plan for Westside, what is the store count going to look like in the next 5 years, say?
I think we take each year at a time. I think what we want to do is make the stores we have continue to trade well, beautiful stores, continue to have relevant product, and to keep up with the right product for the market. I think we must make sure all the stores in our portfolio are profitable, and that for us is the big focus.
If we talk about the share of demand picture in terms of online and offline, could you give us a mix of how that is working out for Westside, and what's the pace like there?
Yeah, so I think we all know now that online has originally been quite discount-led. We've built an online business that we think complements our store business. It's an omni-channel business. It will continue to grow, hopefully at a faster pace.
If you could also highlight the growth in online versus offline. Is that better in offline or better in terms of...
I think it would be unfair. I think our online business is small, so it's growing at a higher rate.
How much percentage would the online...
7% of our business is online. And it's growing much more than stores, but that's because it's come from a very low base. But we see both going in the same way.
All right, that's the word coming in from the COO at Trent. But let's move on then. And RBI has warned some non-bank lenders against disbursing cash loans in excess of the permissible limit of 20,000 rupees. My colleague Ankur Mishra is joining us on the phone line with all of those details. Ankur, good morning. Take it away.
Yes, you would remember that Reserve Bank of India had taken action on IIFL Finance regarding the gold loan disbursals. In fact, they have been stopped from disbursing any fresh gold loan to new customers. And now, Reserve Bank of India has sent an advisory note to few of the select gold loan NBFC companies, and they have been asked to adhere to the norms under IT Act, in which the highest limit for cash disbursal is rupees 20,000. The direction says, please refer to provisions of Section 269 SS of Income Tax Act, which stipulates that no individual can receive more than rupees 20,000 as loan amount in cash. Now, this direction has been given after the assessment which has been done by Reserve Bank of India. Although whatever the flaws that may have been observed, that was not in excess of the number which required any kind of direction or any strict action from Reserve Bank of India. But what regulator wants is adherence to norms, and hence this kind of advisory note has been sent to these select gold loan NBFC companies. You would have seen action from Reserve Bank of India has been taken from especially past 3-4 weeks to different NBFCs as well as Reserve Bank of India, and these directions come as a supervisory action of the regulator.
All right, thanks Ankur for all of those details. Now let's get to the latest on the Air India fiasco with flight cancellations on the back of crew members taking mass sick leaves. The Aviation Ministry has also asked the airline to resolve issues and set things in place as per DGCA norms. Air India Express Employee Union has also written a letter to Tata Sons chairman as well. Let's also go across to Sumit Chaturvedi for more details on this. And of course, there's Air India Express CEO writing a letter to his employees where he's talked about the company leadership being open to discussing the issue. Let's get Sumit on board and discuss all of that with him. Sumit?
In the latest in Air India Express problem, its CEO Alok Singh has written to employees telling them that, yes, there are disruption in operations, but the disruption caused by employees, they are just a part of 2,000 odd employees which are working with the company. He said that the people from operations, commercial, other departments are still working hard for enabling the airline to fly. He also said that there is another professional growth opportunity for everyone. So that is why there is no need to have any cause of concern there. He said that since last evening, 100 cabin crew has reported sick so far, and this has heavily disrupted operations. And it has disrupted 90 flights as well. In a way, he's trying to instill confidence in people in his employees, that airline is perfectly working fine. It's a section of employees that are creating trouble.
All right, Sumit, thanks so much for taking us through all of those details. And with the latest that's happening at Air India, we'll bring you more details as and when we have them. But let's move on then. And sources tell ET now that the FinMin has taken note of RBI's draft project finance norms and is likely to discuss the matter with banks and other stakeholders. Prakash Priyadarshi, my colleague, is here with all of those exclusive details. Good morning, Prakash. Over to you.
Yes, we are learning from our sources that the Finance Ministry has taken note of RBI's draft project financing norms. We are given to understand that the Department of Financial Services is currently studying the draft guidelines. We are also given to understand that the DFS is considering whether it should submit comments on draft guidelines. In fact, banks will submit their comment within the given time frame, and this matter will be discussed with the banks and IBA if required. In addition to that, what we are also learning from our sources is DFS is likely to take this matter forward after receiving comments from the banks. And the banks will assess the impact on their balance sheet. Based on banks' assessment and feedback, DFS will approach RBI going forward. However, at this point of time, what we are learning from our sources is that banks have not approached Department of Financial Services yet.
All right, thanks Prakash for all of those exclusive details. Now moving on then, with the staggering premium of 1 lakh crores in financial year 24, with 20% growth, the health insurance landscape is rapidly evolving with over 50 crore citizens now covered. Initiatives like Cashless Everywhere are revolutionizing access to care, with over 60% of claims settled cashlessly. Now my colleague Anurag Shah is standing by with more details. Anurag?
So health insurance industry is growing at a very fast pace, and FY24 we have seen that health insurance premium has reached the mark of 1 lakh crore with a CAGR growth of 20%, and it's poised to grow ahead also. If we talk about the claim, then in FY23 the around 75,000 crores of claim also been given by health insurance industry. Around 2.5 crore claims has been given. 50 crore citizens are covered under the health insurance, and moving forward for the insurance for all target set up by the insurance regulator IRDA. So few recent initiative taken by the regulator and insurance companies will help policyholders also in a growth of overall health insurance industry. The Cashless Everywhere initiative, in which 40,000 hospitals are connected from where policyholder can avail cashless benefit, even though is their own insurance company is not empaneled there. Other from that, fraud elimination is on which insurance companies are working. So if the initiatives like cashless everywhere get full success, then fraud elimination will happen and the policyholders premium will also can reduce. Other than that, there are few recent announcement done by the insurance regulator IRDA, which is also enhancing the overall health insurance industry. These are the main reasons in which there are the simplification of product, reducing of the waiting period. Now for pre-existing disease, the waiting period had been reduced from 4 years to 3 years. The overall customer base coverage has been increased by the IRDA. So these are the major initiatives taken by IRD. Other than that, for modern medical treatment is also covered under the insurance policy. Mental illness, physical disabilities, these are the customer-centric approach enhanced by the insurance regulator IRD, and going ahead we'll see the national health claim exchange for the filing of the claim, and customer information sheet also being introduced for the simplification of overall health insurance.
All right, well, let's talk about the big numbers that came out yesterday post-market hours, and that's from L&T. They've gone ahead and reported a steady set of numbers for the fourth quarter. The company reported revenue, EBITDA and margin in line with estimates, whereas PAT came in higher than the analyst expectations. L&T has also reported FY24 order inflow higher than 3 lakh crore rupees, up over 31% on a year-on-year basis. Let's also go across and listen into what the management had to say in terms of the guidance going ahead for FY25. Listen in.
Since we have had a very large base of orders of almost 3 lakh crore, and considering that maybe 4 or 5 months we might lose out in the government formation, new government, all of that political issues, we've assessed a growth of around 10% in terms of fresh order intake for the FY25. But looking at our order book of 4.75 trillion, we do think that the revenue growth would be around 15% or thereabouts. We think that the execution, which is at 21%, which execution has resulted in 21% growth in FY24, could be around maybe 15% or thereabouts. Given the geopolitical issues, there's a lot of speculation around what will be the consequences in terms of logistics cost, what will be the consequences in terms of energy cost. A lot of industry is also switching over and doing energy transition. Margins that we will report on 15% revenue growth for the core businesses would be around the current levels, which is 8.25 thereabouts.
All right, well, that's the word coming in from the management of L&T. But let's go across and also take a look at what brokerages have to say about L&T and their quarter four performance. We're getting a note this morning from Kotak Securities. They've maintained their sell rating on the stock, have gone ahead and also trimmed the target price to 3,000 rupees from 3,100 earlier. So 100 rupee cut in the stock price is what they're penciling in. They believe that the weak parts of the guidance have not come as a big surprise to them or to the street, and they're saying that the 4% miss in the core E&C EBITDA is something that is not that is very well liked by Kotak Securities. Standalone infra margin is still down 100 bips, so that's something that they're also not very happy about. And flat core margin guidance looks weak going ahead. Overseas order guidance has also seen a 25% decline, so that's also something that Kotak is not liking about L&T's numbers. So all in all, a slightly bearish note coming in from Kotak Securities for L&T this morning on the back of their quarter four numbers.
Absolutely, and let's keep it going with earnings then. And Hero MotoCorp reported a healthy set of numbers in the fourth quarter. When you look at profit, that came in line with expectations, and meanwhile revenue and margin also came in higher than analysts' expectations. Now, the management said that it expects the macroeconomic factors to aid the industry's growth and is looking to gain market share on the back of launches in premium and 125cc segment. Hero Moto also announced a dividend of 40 rupees per share. That's about Hero Moto, but when you look at TVS as well, they also reported their earnings, and when you look at the revenue, EBITDA, margins as well as profit after tax, all of these came in line with the estimates. In terms of what they had to say in the con call, then they talked about how there's positive growth in the domestically as well as overseas in financial year 25. They also talked about how they are going to be launching an E3-wheeler in financial year 25. And in terms of the PLI approvals that were keenly watched then, they talked about how the PLI nod will be helping them reduce EBITDA losses as well. So that's the word coming in as far as TVS is concerned. But when you take a look at what brokerages had to say as well, when you look at Hero Moto, then Jefferies maintained a buy on the counter. And in terms of key growth triggers, they talked about how two-wheelers are poised for growth. In terms of concerns, then what Jefferies highlighted for Hero MotoCorp was market share decline as well as adverse demand. But moving on, when you look at BofA, then they also maintained a buy on the counter. And they're focusing in on the Hero 2.0 strategy that they see bearing fruit in financial year 25. That is as far as Hero MotoCorp is concerned. But when you take a look at TVS Motor and what brokerages had to say about that as well, Jefferies is maintaining a buy on the counter. And they're seeing the two-wheelers poised for growth and exports also recovering. Now, lastly, when you look at what Goldman Sachs had to say about TVS Motor as well, they're maintaining a neutral rating, but they're seeing the pickup in launches and PLI incentives in financial year 25. And they're also saying that the international markets will be stepping up in financial year 25. So that's something key to highlight for Goldman Sachs as well. But that largely is the handover coming in when you look at earnings as well as what the brokerages had to say about the two counters then.
All right, well, let's keep it going with the numbers. And yesterday, another big set of numbers that we got was from Tata Power that has reported a good set of numbers. They've reported an 11% rise to 1,046 crores in quarterly profit. Meanwhile, EBITDA margin has narrowed to 14.7% from 16.3% in the same period last year. Let's go across and hear out the word from the management on the outlook going forward. Listen in.
This is a draft that they have given. It is under discussion. So I don't think we should preempt that what ultimately RBI will do on this. So let's wait and watch what ultimately comes out. And then we will be able to take a call that what will be the impact. But as you know that we don't do non-recourse financing. We do financing based on the balance sheet of the renewable company. So it may not have too much of impact. Scheme is to provide rooftop solar to nearly 1 crore households. And considering that the average size of this would be between 2 to 3 kilowatt per house, because what registrations we have seen of people who have registered, mostly it is in 3 kilowatt and some in 2 kilowatt. There is very little of 1 kilowatt. So even if we just do with a thumb rule, we would be having a requirement in the country of nearly 25 to 30 gigawatt of rooftop. Now, this will take 3 to 4 years to get implemented. And even if we consider that every year there is a 10 gigawatt implementation, we can expect, and today we have a market share of nearly 20%. We have more than 2,000 megawatt of rooftop that we have already installed in the country. So we will play a very, very important role, and you can definitely expect that we will have a market share of 20%.
Well, all right, that's the word coming in from the management at Tata Power. Praveer Sinha, MD and CEO, that was the word coming from him. Good set of numbers coming in from Tata Power, but on the flip side, we had a very weak set of numbers coming in from Piramal Enterprises. That stock is also going to be in focus today. Let me run you through what the numbers were. Net interest income has come in at 734 crores, which is down 11% on a sequential basis. Operating loss has been logged in for this quarter at 106 crore rupees versus profit of 731 crore rupees in quarter 3. Profit of 137 crore rupees is also aided by exceptional gain that they did see coming this quarter. And exceptional gain has been of 1,507 crore rupees. This is on the back of the provision right of on AIF and the tax write back that they've seen this quarter coming in. Overall loan book has come in at 68,800. You were expecting that number to come anywhere around 70,000 crores. So that is also slightly missing our expectations. Wholesale loan book is down 14% sequentially. Retail loan book on the other hand has come 11% higher sequentially, and the GNPA is flat at 2.4% on a sequential basis. Let's understand what has happened largely when it comes to Piramal Enterprises. Now, In quarter four, the management undertook accelerated rundown in the wholesale 1.0 AUM as well. And also what was key to watch is that this rundown has impacted quarter four PAT by 1,350 crore rupees. And management expects further reduction in this book by roughly 600 to 700 crore rupees in FY25 as well. So slightly disappointing commentary coming in over there. They've disclosed their NIMs and in its growth business. So that's also something to look forward to. NIMS was down 50 bips on a sequential basis to 6.8% owing to a rise in cost of funds. Management remains cautious on this, and they also say that there would be further NIM contraction on the cards as well. But they continue to invest in the franchise and they plan to open 500 to 600 branches in FY25. Lastly, another key announcement that came during their quarter four numbers was the merger announcement, and the merger of Piramal Enterprises with its 100% subsidiary Piramal Capital and Housing Finance is about to take place. The merger will result in one consolidated entity to pursue all businesses. Shareholders, now what is the exchange ratio? Shareholders of PEL would receive one equity share and one non-cumulative, non-participating redeemable preference share of 67 rupees of PCHFL, which is Piramal Capital and Housing Finance. This merger addresses the listing requirement of RBI. Remember now, Piramal Capital and Housing Finance is an upper layer NBFC and is required to be listed by September 2025. This entire process of the merger is expected to be completed in 9 to 12 months. But on the other side, let's also look at the forward-looking guidance that the company has given. They've revised their AUM guidance slightly higher from 1.3 lakh crore to 1.5 lakh crore rupees by FY28. They expect AUM growth of roughly 15% going ahead in FY25. They see no major challenges on asset quality and they aspire for a retail wholesale mix of 75 to 25 by FY25. Remember, this company is undertaking retailization of its loan book, so we'll just have to wait and watch and see what happens on that front. But well, yes, poor set of numbers largely coming in this time around, and we'll just have to see how this impacts the stock price in today's trading session.
Absolutely, and it'll be Piramal Enterprises that you need to keep an eye out for on account of that earnings fine print, the business update coming in, as well as the merger update. But time for a quick break then, and when we come back, we'll take a look at some more stock-specific news.
Hi there, welcome back. Thanks for staying tuned to Market Cafe. Let's go across to my colleague Ansh, who's standing by with the FNO snapshot, the derivative outlook that we can expect for the day. And Ansh, today is a Thursday, Nifty expiry day. Tell us what levels are you looking at?
Right, so starting with Nifty first, Nifty closed exactly flat in the previous session, and this has happened for the first time in over 7 years. So this indicates there was no directional move in the previous session. And index actually closed slightly above that 50 DMA, but it needs to go above the 20 DMA, which is around 22,430, to regain its positive sentiment. On option front, like you mentioned, that today we have weekly option expiry, so we may expect some volatility in the market just before the closing. And here we are seeing call writing happening at 22,400 mark, indicating traders expecting strong resistance around this level. Whereas on downside, we are seeing some put writing happening at 22,200, indicating good support base around this level. Moving on to Nifty Bank. So index actually, Nifty Bank actually closed just between the 20 and 50 DMA, and just like Nifty Bank also needs to go above the 20 DMA to regain its positivity. This 20 DMA is around 48,400 level, but just 100 points above that, we are seeing strong call writing happening at 48,500. So there's a lot of resistance on upper side. Whereas on downside, we are seeing mild put buying happening at 48,000 psychological mark, which indicates that traders expecting Nifty Bank to go below this level. But just 400 points below this level, we have 50 DMA, which is around 47,600, which may act as a cushion to the falling prices. Let's have a quick view on market movers as well of Reliance and HDFC Bank. Starting with Reliance Industry. Reliance Industry actually climbed above 100 DMA, but it faced selling pressure at day's high and it closed below its crucial level of 2,840 level. Even this stock needs to go above this critical level. Talking about HDFC Bank, the bank has actually fallen and it has reached to a very critical support of 1480 level. Here we may see some pullback happening, but it needs to go above that 1505 level to regain positivity in the market. So in a nutshell, market is just below its critical level, be it Nifty, Nifty Bank, HDFC Bank or Reliance, and they need to go above that critical level to regain the positivity in the market. Let's also see what FIs did in the previous session. In index future, they covered around 11,000 contract and they added around 15,500 contracts. So net to net, we were seeing that net addition of around 26,000 contract on downside, due to which the total short has actually touched a 3-year high level as well. This shows their bearish sentiment in the market. Also, their total long has come down from 41.8% to 38.5%. This shows their bearish stance in the market.
All right, thanks Ansh for that roundup coming in. So that was about the futures and options roundup for you, but let's also get a move on then and take a look at which are the stocks that you should keep an eye on account of brokerage notes, and Gaurav is standing by with that roundup. Gaurav?
Well, yes. Let's begin with defense sector first. And if you look at defense sector, now Nomura has initiated on 2 companies. They have initiated on Hindustan Aeronautic with buy rating and a target price of 4,750 rupees. And on Bharat Electronics, they have initiated with buy rating and a target price of 300 rupees per share. What they believe is that India is going to be self-reliant when it comes to defense sector, and they see 138 billion worth of opportunity till FY 2032 in India. Apart from that, if you look at Hindustan Aeronautics, they believe that there is a case for further re-rating in this stock. And if you look at BEL, it is trading at a premium valuation, but they believe that this premium valuation is likely to sustain, and that is why this bullish wave is coming up from Nomura. Next, let's talk about Bharat Forge, because we recently saw this stock was up almost 10% in yesterday's trade. But now Citi has maintained sell rating while increasing the target price to 850 rupees for this stock. What they believe is that Q4 numbers were slightly below their estimates, but commentary for FY25 has been strong from the company. Overseas subsidiaries are continuing to making losses for the company. And lastly, they believe that uncertainty in global demand as well as Indian gun order could be a overhang for the stock, and that is why they have maintained sell rating for the stock. Next, let's talk about Voltas, because now Citi has maintained buy rating and increased the target price to 1628 rupees per share. What they believe is that Voltas is continuing to gain market share and be a market leader in AC segment. Apart from that, if you look at Voltas Beko, that segment is also gaining market share, and that is why they have now increased their target price to 1628 rupees per share. So all in all, on back of the brokerage notes, we will watch out for these stocks because we are seeing a strong view coming up from brokerages on these counters.
All right, Gaurav, thanks so much for taking us through that. But a big set of nifty numbers expected today, and that's from SBI. Gaurav, take us through what the street is penciling in for the numbers. What is your poll saying, and what can we largely expect from the numbers this time around?
Well, yes. Talking about SBI numbers, if you look at the street's expectation now, they're expecting net interest income to increase almost by 1% on a year-on-year basis, because we may see cost of funds rising, and that may put some pressure on net interest income. Apart from that, if you look at PPOP, that may decline almost by 20%, and this is because of the provisions that SBI had already said that they will make worth 5,400 crore rupees in this quarter. And PAT is likely to follow the same trend. It is likely to decline 20% on a YY basis. Talking about now advances and deposits, they are likely to increase. So advances are expected to increase almost by 12.3% on a YY basis, while we may see deposit increase of almost 11% on a YY basis for the bank. And lastly, if we look at net interest margins, they are expected to moderate 5 basis points, and this may remain around 3.15% in this quarter. Apart from that, if you look at asset quality, street is not expecting any kind of risk in asset quality. In fact, they are expecting this to remain healthy for this quarter as well. But lastly, we will be watching out for commentary on cost of fund, and also we will be watching out for commentary on the RBI's draft circular which came on project under implementation, because as we know, SBI has almost 11% of its portfolio in the infra segment, and that is why we will be watching out on how the commentary comes out from the management. But all in all, on numbers front, we are not expecting any kind of negative surprise from SBI in this quarter.
Alright, thanks Gaurav. So we'll keep an eye on the numbers as well as the commentary coming in from the management. But with that, we're timed out on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, Snehisha, as well as the entire team that put this show together, thank you so much for tuning in. You don't go anywhere because the market takes all of the action forward.
जल्दी जल्दी चाय दे दो, काम पे जाना है।
If you like this video, then like, share and subscribe to ET Now.